Hey friends, welcome back to the channel. I know this is a heavy topic, but today we're diving into something that many people don't want to think about. But it's something we all need to prepare for. What should a surviving spouse do after the death of their partner? And no, it's not just about the emotional side, it's also about the financial side. Whether you're dealing with a loss right now or just want to be proactive in your own planning, today's video will help guide you through the important tax decisions and retirement account management that need to be made. Trust me, you're going to want to stay till the end, as we have some very important tips to help you navigate this difficult time while making the most of your financial situation. So, grab your coffee, sit back, and let's get into it. And as always, if you find this video helpful, don't forget to like, subscribe, and share it with someone who might need this information. Okay, first things first. Losing a spouse is one of the hardest things anyone can go through. No one wants to think about what comes next. But as tough as it sounds, there are practical matters to take care of. And those matters often revolve around money, especially taxes, and managing retirement accounts. I understand this isn't a pleasant topic, but knowing the right steps to take in a time of grief can actually make things a bit easier down the road. Trust me, getting organized quickly can save you tons of stress later on. So, what should you do immediately after the death of a spouse? Well, step number one is to get in touch with your financial advisor, and if you don't have one yet, now's a great time to find one. But what are the first things that need to happen? Here's the immediate to-do list for you. Notify the Social Security Administration. You'll want to check on survivor benefits for the surviving spouse and any dependents. Contact the insurance company. If you have life insurance, you'll need to file a claim and start the paperwork for any benefits due to you. Review your spouse's will and estate plan. If there's a living trust or will, you'll want to see who is named to handle the estate and make sure there's no confusion about your next steps. Notify the employer. This includes retirement accounts like 401(k)s or pensions, and make sure to address benefits or survivor plans. Get the death certificate. You'll need a certified copy to handle many of the administrative tasks that will come next. Once you've got these steps in motion, it's time to move on to the tax planning and retirement accounts. Okay, let's get into retirement accounts. You're probably thinking, what happens to my spouse's 401(k) or IRA? Is it just mine now? Well, not exactly, but don't worry, we're going to break it down and walk through what needs to happen. First things first, if you're the surviving spouse, you have some important options when it comes to managing your spouse's retirement accounts. Depending on whether it's a traditional IRA, Roth IRA or 401(k), the rules might differ slightly. But there are a few universal options to be aware of. Option number one is the rollover. If you're the surviving spouse, you have the ability to roll over your spouse's IRA or 401(k) into your own. This means you essentially make the account yours and it'll be treated like your own retirement account. If it's a traditional IRA or 401(k), this is a great option because it allows you to keep those tax-deferred benefits. Plus, it gives you the freedom to choose your investments and you won't have to take required minimum distributions, RMDs, until you turn 72. So you can delay taking money out for a while, allowing the account to continue growing. And if it's a Roth IRA, even better. A Roth IRA rollover means no taxes when you withdraw the funds, tax-free money in your retirement. That's what we all dream of, right? Another option is to take the account as a beneficiary. This means you don't roll it over, but you inherit the account and keep it in your name as a beneficiary IRA or inherited 401(k). This is where things get a little more complicated. For a traditional IRA, you'll still have to take required minimum distributions, RMDs, but the good news is that you won't have to take them all at once. Instead, you can stretch those distributions over your life expectancy. That's called a stretch IRA, and it can help you minimize the tax impact. Pro tip, with a Roth IRA, you won't have to take RMDs at all, which is a major win if you want to let the money grow without being forced to take it out. Now, the third option is to cash out the account. Technically, you could just take the money and run, but here's the deal. You'll have to pay taxes on any pre-tax contributions from a 401k or a traditional IRA. And trust me, you probably don't want to pay those taxes all at once. It could really hurt your wallet, so it's best to avoid this unless absolutely necessary. Now let's talk about taxes. If there's one thing you want to get right during this time, it's tax planning. When your spouse passes, you'll want to review the tax implications for your new filing status and consider strategies like tax loss harvesting or converting traditional IRAs into Roth IRAs to minimize future tax burdens. It's also important to look at the whole picture: income from Social Security, life insurance benefits, and those retirement accounts. You'll want to ensure you're optimizing your tax strategy and not triggering higher taxes than you need to. At this point, you might be feeling a little overwhelmed. I mean, tax planning and retirement accounts are no joke. And while I'm giving you all this info, it's definitely a good idea to consult with a financial advisor or tax professional during this time. These professionals can help you navigate the complexities, especially when it comes to handling your spouse's estate, minimizing taxes, and managing those retirement accounts in the best way possible. So, there you have it. It's not an easy subject to tackle, but tax planning and managing your spouse's retirement accounts after their passing is something that needs to be handled with care, attention, and the right knowledge. Remember, don't rush through these decisions and don't hesitate to get the professional help you need. Before we wrap up, please take a moment to like, subscribe, and share this video with someone who might need this information. We're all in this together, and the more we know, the better we can plan for the future. Thanks so much for watching and take care. We'll see you in the next video.